Burgess and Bolton's weekly wrap-up.
So, hello everybody and welcome to this week's edition of Burgess and Bolton's weekly wrap-up, where we look at everything to do with the London market, technology, change, innovation. This week we have a guest. We have Rennie Schoinger from Guidewire, who is going to talk with us about the results of the TINTEC Technology Conference pre-event survey. That's coming up, but first, got a bell. We'll do the news. So we can't not talk about Liz Truss's government and the mini budget that was a massive budget, and then the fallout that's still happening now. And I guess from our point of view, Ben, we often talk about communication and the use of language and how important it is in being able to, create a reaction. And we've just had a prime example of it last week, where you just say some stuff without any kind of strategic direction, you do have strategic direction, but without the plan to back it up. And people just go, I don't believe you.
Yeah,
it needs
to be reviewed at some point in the future, all of this, because it is an unmitigated disaster. And communications-wise, it's completely obvious that they should have spoken to various of the parties in government before they got in. So they obviously rushed in with their new supply side economics philosophy, trickle down, whatever all of that is, and then just went for it. And they deliberately excluded experts in the OBR, and they deliberately really didn't want to speak to the Bank of England, particularly about what they were, so they generally sort of had conversations with the Treasury, and then they launched it. But it was a desperately poorly explained policy at the very minimum. I mean, you could. I don't know why they seem to have sort of tin ears over what the public might think about this as well. It's the sort of policy that if you're going to go for things that are potentially going to create growth but also create inequality, then you would want to sort of maybe check that out a bit before the first week of government. I would have said, not that what do I know, but that seems terrible. They're trying to wrap it up as it's part of the whole global economic thing, and it's just, we're doing the right thing, and we're just slightly swimming against the tide. I think that's rubbish. That's not true. I mean, what's happened is they've exacerbated what was already a bad situation by very poor communication, because it still is communication, because they haven't actually made the tax cut. They haven't actually done any of that, and they haven't even done the second half of the whatever they call it, the mini statement or of course it's terrible. It's really awful. I mean, it's just how not to run a...
Yeah. And it goes back. Remember when we were talking about groupthink and we were talking about the creation of the European Super League and them sitting in that room going, yeah, I think this is a really good idea. I mean, what could possibly go wrong?
I think that's exactly what's happened. I think a small group of people have just got so excited about being in power that they've decided, and they've had this idea for some time, and it's all in their heads and in some rooms or bars or wherever they've been, and now we can just announce it and it'll be fine. But that's the point, is that in the real world, and the idea that the markets are not complex, that you don't need to ask about it, is extremely stupid, because I think the markets are incredibly complex, and at the moment very, very sensitive, because of the way that the central banks have kind of messed up the interest rate rise and not got a handle on inflation. So there's all of that going on. So I mean, it obviously never occurred in their groupthink mode that this could be in any way seen as bad by anybody.
No, I think the last thing I'll say about this is that we've been listening to a podcast by Hugh Henry, who knows all about. He used to run a hedge fund in the financial crash and made a lot of money by seeing kind of macro trends and things like that. And he the way that he talks about markets is not through data and stats and charts, which all have a place, but quite often he talks about language and sentiment and trust and very, things that you wouldn't normally think of as a hard-headed, broker or stockbroker, whatever. And it's fascinating, isn't it? That, just coming back to the original point, communication matters, sentiment matters, the way that you appear or don't appear, it matters. So, very interesting.
And, it's that thing of, communication doesn't matter too much. Don't worry. We'll just say it and keep on saying it and double down on it. We'll be fine. No.
Yeah.
Nope.
Okay, we'll see how that plays out. So the other big news is a great big hurricane, Hurricane Ian, crossing the Atlantic, and it's going to hit Florida and Tampa and all that kind of stuff. I'm not too sure whether it's hit yet.
Yeah.
It has hit. I did see an email that came out this morning that was a kind of to investors kind of giving a heads up about what it could be. And I think they're touting a figure of around about 50 billion. You've just done a bit of research, Ben. How does that sit in the grand scheme of things? Is that a big one?
Yes, that will be big. Definitely big if it's up to 50 to 60 billion. Some of the biggest years, 2017 was huge, 160 billion, I think, in losses. Both those were hurricanes, Harvey and Irma and Maria came. So a lot of hurricanes in that year. So I think that was the biggest year. And then, some of this is because assets get more expensive as you go forward. So 2021, for example, was quite a big year. It was 110 billion. But of course, this is only the beginning of the hurricane season. We've had, I don't know how much we've had so far in 2022. So I imagine that if it is really 50 to 60 billion, then that's, added to everything else, it's going to be a very big year for catastrophes. So I suspect some people who got out of that market will be very pleased, but still a lot will be on the hook for it because it's, it's still all reinsured. I think it will put a lot of pressure on the 1/1 renewals because it already was pressurized, but a really big one, once in 100-year catastrophe, which Tampa is. That's not positive, but it will drive rate up higher, I guess, and it will make renewals very difficult for a lot of parts of the world. Yes. And then add to that Ukraine, add to that floods, wildfires, climate stuff we've had this year, cyber stuff we've had. We've now just had the just hearing today about the sabotage to the Nord Stream gas lines from Russia. There's some big costly losses down the pipe.
Yeah. So big news. So there we are. Right. Let's get on to our interview. So earlier this week we recorded a quick interview with Rene. We had looked through the results of the pre-event survey for Tintec happening on the 11th of October. Picked out a few themes, and this is how it goes. Let's play the video, and then we'll come back and say a few words. So, welcome, Rene. Thanks ever so much for joining us on Burgess and Bolton. We're going to review the Tintec pre-event survey and some of the results that has thrown up shortly. But I thought I'd start by just getting a bit of an insight into kind of your background in insurance. We've known each other for a long time, but I just thought, give us a potted history of your involvement in insurance technology.
Yeah, thank you, Jeremy. And first of all, thanks for having me. I'm really delighted to be here with you and Ben today. Actually, I started in insurance 25 years ago. I did study applied mathematics with a specialization on mathematics in insurance and economics, right? So I really understand how all this premium stuff is actually calculated. I then started my career developing an agent system for a German life insurer, right, mid-90s, which was kind of I think it's no longer called legacy. I think this is more like in the museum right now, this system, right? And then I actually had various roles in insurance, mainly on the software side. I did work for a process mining company where we did process mining on an automated basis, right? Doing this manual process analysis to automated discovery and delivery. And then 8 years ago, I actually joined Guidewire, right? Guidewire, software as a service provider for the insurance industry. And this is where I hold the role of director of EMEA product marketing at the moment.
Cool. So Ben, we've actually got somebody who knows what they're talking about when it comes to tech.
Yeah,
this time.
I'm not saying anything now.
It's put us to shame. But anyway, we're delighted to have you here, René. Thanks ever so much. And as I said, we're going to be running TinTech on the 11th of October. And as part of that event, we survey the audience to get a sense of what the key topics and issues are that they would like to see covered. And we thought it'd be interesting just to pull out kind of three, I guess, key things that we kind of knew in the back of our minds were bubbling under the surface, or maybe hot topics, but the survey just confirms it, because it just comes through in the results. So we just thought we'd highlight three areas, and I'm going to start. So the first one that comes out is a London Market issue. There seems to be a lot of the audience operating in the London Market and have a real appetite to find out what's going on with the modernisation agenda, the future at Lloyd's, Blueprint 2, the digitisation and data first strategy that they've got there. And I think it's around certainty, or at least reassurance around the timelines, the cost, what it means for them and their technology architecture. And I think there are a number of interesting comments in there, especially around data and data standards. And that has been something that's I think I actually saw an email update that came out today, which was saying that Accord were going to be the data standards, or at least they're starting to progress that. So yeah, I think it's going to be really interesting on the day to get into some of these topics in more detail, get an update from Lloyd's on that, and try and delve into some of these key challenges, I suppose, for the London Market at the moment. What's your take, Ben?
Well, I'm interested in the progress. I speak to a lot of teams who are frontline teams, claims teams, underwriting teams, and I think it would be good to be able to come away, I think, and to talk a little bit today about how technology is going to impact those teams in terms of enabling them to be better at what they do. I think the other thing is when that might happen. I guess some kind of that's a really important question, is what and when, I think, and how is that going to impact customers? What are the benefits potentially, I suppose, that these people can start to think about? So I presented to a claims team this morning, for example, and actually the discussion there was, well, I don't think technology is really going to come and help us anytime soon, so we're just going to carry on as we are with our people. That's a shame, because I think things are happening, and it's maybe that's just a communications thing, but I think it's the tangibility and applicability, I think, of it all, I would say.
Yeah. I guess it's that sweet spot, isn't it, René, where technology and humans come together, and suddenly the sum of the two parts becomes something a lot greater.
Yeah, absolutely. I mean, first of all, I mean, my big background from my experience is more on the general insurance side, but I have always been amazed by the London Market and Lloyd's of London, right? It's a really complex marketplace, really complex risk. I mean, this is what, in my opinion, makes insurance interesting at the end. So I think all of this complexity that we need to appreciate leads to the situation where, yes, there's change necessary, right? Technology can help, but at the same time, right, automation is necessary, but you will never come to a stage, in my opinion, where you will have 100% of the business at Lloyd's, at London, fully automated, right? There's still a lot of complexity. There's human intervention necessary. There's human knowledge necessary. But I think the opportunity for me is really to bring technology and human knowledge or human skills together in a meaningful way. I think there's a huge opportunity, and this then goes into modern systems, moving away from legacy, where you can provide people, for example, underwriters, people working on claims, with a lot of insights, especially through data insights. But these kind of insights, I think right now, if they exist, then they are still heavily disconnected from the operational processes, they're not accessible to these kind of people. So I think the first step really is to enable people to make better decisions. And this will all place towards efficiency, towards speed, and also towards automation, right? I think then the next step is what kind of tasks then are able to be automated.
It's really interesting about the claims thing, Ben, that you went to this morning when they were saying they're investing in their people. I think it has to be a dual approach. I don't think you could do one or the other. I don't think you can just invest in people. That's a really big challenge. We talk a lot on the show about the war for talent, and you're not going to do that. And I think the smart companies are investing in technology that means that they, with the human, let's call it just human resources, can actually do more with less, if you like. And I think that, really just building on what you're saying, Rene, I think that's the opportunity.
I was going to ask Rene, is it, to me, it seems like, and this is probably always a bit the case, is it's when it's you kind of start with saying it's a technological issue. That's some of what London and other places do, and I get that. But actually, I sense that in a way now we're moving a bit more into a phase of saying, okay, so let's just put the technology to one side for a second, and let's talk about what problems we're trying to solve. And as you said, what are we trying to enable, and what are we trying to help? And is that sense correct? That is shifting a bit, and what I mean by that, just to sort of finish off the point, is it feels to me like providers like yourselves and others are talking much more about, look, we really want to get into the what's your problem, where can technology help, as opposed to grand transformational change and a sort of Emerald City, Wizard of Oz type of future.
Yeah, no, fully agree, Ben. I mean, first of all, it's really about understanding what are the real business issues, right? It's not about here's a new technology, right? Here's a new data source, just take it, consume it. But then a lot of people don't see the benefit, or it might not have a benefit because nobody was really looking at the underlying business issue. I mean, this is where we work really close with our customers, even in the London market, right? To explore these issues, these challenges. And then, as you said, Ben, I think the key is technology is heavily important. Technology is actually the enabler for innovation, the enabler for modernization, but it's not, how do you say, it's not, sorry, I'm lost in translation now. It's not everything, right? No. You cannot go without humans, without human interaction. So technology is not going to solve all of your issues, right? You also need to think about talent who can actually drive this new software solutions, these new technology solutions. You need to think about your operations, right? That needs to be aligned with these technologies, and all these things actually then make the equation complete.
And we've talked a lot, Rene, as well about culture, and I suppose off organizational structures. Do you find, and not just you, but maybe when you talk to other technology providers, that you feel there are there still barriers or obstacles in that? Because to me, if an organization isn't really ready for it, and I have to say, I think some of the organizations are not, they're not ready for it. I mean, they're not. Yeah. I mean, they wouldn't embrace anything, let alone technology. So you sort of, I'm just sort of wondering just how much of that is changing, or is it still quite a difficult one?
I think it has developed positively. What I see in a couple of our customer projects is that, organizationally, I think the biggest issue is still the communication of the change, communicating the purpose of change, communicating the purpose of technology, new technology, but also, changed operations, right? I think A lot of the, let's say, executive senior level management, they have a clear vision of why change is needed and what kind of change is needed. But then I think what also needs to happen, you really need to communicate purpose, right? Purpose is one of the keywords at the moment.
Yeah.
What is the purpose of this change to the people who actually need then to interact with these new processes, new technology on a daily basis, right? I think this is where still there's a lot of development potential or a lot of development opportunity in this area.
I find that fascinating, and I think it is true. I think what I've seen certainly is leadership can get onto technology for a number of reasons, I suppose, often for cost reasons, and I think that's a very tempting part of it, obviously. But I have seen organisations, as I guess you have, who've gone too far and they've basically fired a lot of people. So service has dropped, and we've got this evidenced, of course, in our data set. And there is a lot of at the moment there is a lot of concern out there about service. And so in some areas, so if you go out into the UK, so the UK regional market at the moment, there are claims portals and some things operating quite front line, and they were pretty good, right? They worked well through pandemic and they seem to help some of the surgeries. But we're getting some feedback now that there's not, where they've got live chat lines, which are very good and worked pretty well for a while, we're getting feedback that those are not manned properly. And, you know, so you feel sometimes like it's a bit one step forward and two steps back. I mean, I literally present going, hey, look, this is some quite good technology that's actually working. And then the next month I have to come in and go, yeah, but the technology now doesn't, you seem to have just left it on its own. I don't know whether there's that's why I'm asking about culture and understanding, and whether there's a sort of, whether we've got enough people in this market who really want to embrace and push it on, I suppose. And not just this market, London, but any of the insurance markets, generally speaking, you know.
Yeah.
I think from the people I talk to, and I've got to say that, you know, I talk to the believers. You know, they believe in this stuff. So, you know, I don't know how many, you know, what percentage of the tribe they make up, but I think they get that you need to have all the elements that we've just been talking about there: the technology, the people, the skills, the purpose, and the whole thing. If it's going to work. Now, whether everyone gets that in the organization, I'm not too sure, but I certainly feel in progressive organizations, say like Mosaic, Ben, who we know pretty well, you know, they get it top to bottom, and it's a message. It's part of their, you know, delivery that you're going to have this type of experience if you deal with this type of organization, and that is underpinned or enabled by the technology that drives it. So yeah, I think it's interesting. I think it'll be really interesting at the conference where we pick this up, especially in some of the sessions that are looking at transformational change and some of those elements, and how much weight you need to put on the different elements at different stages of projects and things like that. It's going to be interesting. Which actually brings me on to the second kind of key finding, if you like, from the survey, which is legacy technology. Now, legacy technology always comes up, and it always has done for the last 12 years or whatever, 15 years that we've been running the conference. But I think there's two things I want to say, I think, about legacy technology now. So, firstly, it was always 100%, you know, we need to sort out legacy technology because it's causing inefficiencies, it's causing friction in processes. That was always the number one driver for, you know, we need to tackle this problem. That is, you know, that's still there, but actually, if you look at the survey results, there's a lot more comments around we need to tackle legacy because it's hindering our customer experience. We would like to put in something around a customer journey, or we need to, you know, that type of conversation is much more prevalent in these results, I'd argue. And I think that is, I think that's really positive, because I think that is probably the right approach. If you're looking to modernize and digitize with the customer, you know, improving customer outcomes as being, you know, your key driver, I think you're probably going to have more success than just trying to an efficiency play. I don't know what you think about that.
Yeah, I mean, I'm fully agreed on that point. But I mean, then I was wondering, you were talking about legacy, right? Efficiency, but now it's shifting towards customer satisfaction or customer experience. I mean, where does bad customer satisfaction or bad customer experience come from? I mean, the initial question is, what do customers want, right? First of all, I think a customer in insurance, right? I mean, insurance is not really a proactive product yet, right? It's really a passive, even a virtual product, right? It is, I think, one of the first virtual products that we've seen in the world, right? At the same time, when you engage with your insurer, usually you have an expectation, right? You have a claim, you would like to have payment, you would like to have a resolution to the claim, right? But where does all of these poor customer satisfaction or customer experience come from? It is somehow also related to missing efficiency, right? Because the people either missing automation in the background because technology is not made, or legacy technology is not made for automation yet, or actually people that are working on the claim, that are resolving the claim, don't have access to the right information at the right time. So there's a lot of inefficiency that, in my opinion, is driving a lot of this bad customer experience. Then in addition, also I think customers are looking for transparency, right? Again, thinking about the claim situation, let's assume you don't get your claim resolved automatically because it's 100% automated and you submit your claim and you're going to get your payment 1 minute later. But then at least the customer would like to have transparency. What is the status of my claim? When can I expect a resolution? What is the resolution going to look like? And if there's not a resolution, what are the reasons for that, right? And I think this is also where, automation has its limits, right? Because this is where some communication or conversation usually needs to happen to explain a customer, okay, this is the situation, right? We understand you, we show empathy, but still here are the reasons why we are not able to resolve your claim. Finally, or in between. Yeah. Right. So I think all of this plays together. And at the end, I mean, especially in the claims area, right, you have this triangle of accuracy, efficiency, and customer satisfaction, right? And you need to really see how you actually drive all of these three areas or balance these out.
Is that balance changing, René? The efficiency versus the satisfaction, for example, versus the accuracy? I mean, I sometimes see differences in different organizations, and actually individuals almost. Some will say the accuracy and the adjusting is still what we're really about. And you can argue that maybe some of that comes around at the time of a cycle change as well, when businesses get a bit more hard-nosed about the claims payments, which is what brokers will say, of course. And I just wonder whether we need something along the line of standards, you know, where actually we say there are certain kinds of broad-based standards for service satisfaction that could be enabled and helped by technology and measured and monitored.
Bolton's weekly wrap-up.
Everybody's kind of, I think your point of, does anybody know what customers really want, is a really good one. I think they don't really. I mean, I think they broadly know, anecdotally, but I don't think I've seen if I went to other sectors, for example, you would go into, say, Unilever, and they would know everything about the customer and what they wanted, and it would be almost too much information. In the insurance industry, there's very little, and it's partly because it's an intermediated market, of course. But really, I think it may be time that we do understand much more about what the customer wants, because I'd feel, let you in a second, I'd feel that would be a very strong driver for leadership. Say we need to meet that need, that customer need, in some way, shape, or form.
Yeah, no, fully agreed. Usually you shouldn't answer to a question with a question, right?
No.
But my next question would be, how do you as an insurer actually understand what your customer wants, right? Again, you don't have these many touch points. In my opinion, the disadvantage of insurance, I've sometimes referred to this as the engagement gap. I mean, compared to other companies, I mean, Unilever, right? I mean, how many interactions, even indirect interactions, do they have with their customers, right? Insurance, again, right? You have a policy, you get a policy, then you might not utilize or contact your insurer for many, many years, and then all of a sudden you have a claim. The key question to me is, and this, I got different answers, right, across Europe. Is there an opportunity for insurance to become a more proactive offering, a more proactive service? So I'm thinking about risk prevention, insurers acting as a risk consultants rather than helping their customers after the fact when it's probably too late and they have to pay for the loss. This is where I would like to get your opinion, because it seems like in the UK, there's more openness within the market. I brought up this question at a conference, actually an InsurTech conference in Germany, and the initial reaction from the audience was, I don't want to be contacted by my insurer. Why should I, right? I'm not interested. And I was like, well, maybe you think one step further, or maybe you think about the opportunity. I mean, what's your opinion?
I think that's at the heart of the issue, really, because so there are organizations, if I go and see them, insurers that I know, and if they deal directly, as you just described, they will have all sorts of measures in place, and they will talk about monetization of service. They'll say, we found all sorts of areas where we could switch something around, do something differently, quicker, different, we would make more money off that. So there was a clear and obvious benefit to keeping the customer happier in that space. In most other areas in insurance, what falls down, I think, is the level of collaboration or the quality of collaboration that works along the value chain between, let's just simplistically say, the carrier, the capital, and the broker or brokers in that chain. And so I'll give you a quick example. I don't think, for the most part, brokers don't care about telling the customer that it was XYZ brand that paid your claim. The broker wants to say, well, we're Aon or we're Willis and we sorted it out for you. Now, it seems to me that it's a very short and fairly easy step if the broker could say, well, when we paid the claim, we'll say, well done, this was in collaboration with XYZ insurer and they did a great job and here we go. And that indeed does work when the customer or the client knows the insurer. So probably a few years ago, Hiscox was the most famous brand in the UK in insurance, commercial, and it was just very well known, and it had a very strong reputation for service. Brokers would say to us that it was extremely easy and it was very natural to sell Hiscox in because it was a great brand, right? So, and we've just done a big survey in the UK with Bieber, which we asked brokers, how is it increasingly important to work with trusted brands? And 97% said, yes, it definitely is. We need to have these. So I think it is problematic. I don't think it works very well, but I think it could work better. And I'd say technology would play a part in that, because you'd want it to be clearly registered who paid the claim and why, and that you could rate the service or something, I think it's about kind of seeing through the process. Too much of the process at the moment is behind closed doors and isn't transparent. I think that's the issue.
Yep.
Yeah, it's really interesting. Yeah, both said the same thing, sort of transparency and communication coming together to. I would just reflect on whether risk prevention. I can't remember if it was last week, Ben, we were talking about risk prevention at the claims conference, and I think it was you that said that you couldn't quite work out where the value would be if you were preventing all the risk. Eventually your company would just evaporate. There wouldn't be. You would just be providing data to stop a X event happening. But I think there is a mid ground, isn't there? Or mid.
Yeah, I think it's interesting. I mean, I go back to the point that I think there's a potential that standards will come in, because I can see, working in customer service ratings all the time, or broker service ratings, I think it's got to be much more than the carrier keeping the broker happy to get the business. I think it's now got to move into, we're keeping the broker happy, yes, we do that, but we also do this thing which is customer service. And the reason that can be driven forward is because brokers are really competing on customer service themselves much more than they were. So I think it's the time, I think, is coming where it will be possible to start to talk at the top level with the leadership of the big carriers and the big brokers about saying, why can't we establish in some areas some simple standards that do already play out. I mean, Lloyd's set some standards on some things, and some organisations are beginning to set these standards within their own structures, and they improve service overall because of that. So I think it's possible, but it's another of these industry-wide things. But in lots of areas, I've been looking at this, lots of areas like things like delegated authority, which is becoming much more automated inevitably. It seems to me, again, you're quite a long way away from the customer. Because you've got automation coming in, you can actually measure now quite easily what the experience of that customer was and get some feedback if it was no good. Simply because the technology is in there and is there and available at the touch point. So I think you could start to do it practically as well.
Yeah. So that brings us on to the kind of the last kind of finding. Well, not the last finding. There's tons in there, but this is the last one that we're going to cover. And I think the way that I would characterize it is in two parts. And we've talked about this, Ben, haven't we? This kind of I want to say dive, but reduction in investment in insurtechs. And by an insurtech, I mean a startup kind of technology company, not a startup insurance company. So let's just clarify that. So I think, and what the survey is saying is that organizations are making investments, but they are making investments into business challenges, coming back to our original point at the top of our talk. And then the way that they approach that is not through a 5-year big bang transformation project costing X millions of quid. It's much more, to use the overused word, agile approach. It's piecemeal, but with an overarching strategy. So, and that comes through. That isn't just this year. I think that's been building, but it does come through that approach is. And it also leads into the type of technology that's coming through. So if you look at the way that data and APIs are coming in, if you do have that approach, you can be agile and move and pivot your position to be able to take advantage of those new technologies. Is that something you're seeing, René?
Yes, I mean, we see this in many areas. I mean, you touched a lot of areas now. Let's start with the insurtech investments, maybe. Yes, I think what is happening, there's really a consolidation, right? There was this hype phase where, honestly, you could say, I just created an insurtech and you got a lot of money, right? I think what is happening now, and I think this is also reflected in the investments, that the investments not go into early stage startups, they go into what I would say later stage startups, so proven startups, curated startups. I mean, this is something that we also heavily do with our Guidewire marketplace, where we curate all the insurtechs that we actually onboard to our marketplace to be integrated into our platform. So I think what is just happening is really a consolidation, and this goes towards what you then said, Jeremy, around the actual business benefit. I think we are now reaching a point where investors have realized a lot of insurtechs did not provide any business benefit. They didn't provide any meaningful benefit. And they're now focusing their investments on the ones that are proven and that are curated or somehow provide the right business benefit. Agility. I mean, what does agility mean, right? It just means that you don't plan for 5 or 10 years, right? And then you stick to this plan for the next 5 years and you cannot change, right? You just go down the path. Waterfall, right? Classic. I think agile is really just around the flexibility and the ability to adapt to a changing landscape. And I think this is still necessary, right? I think we just need to build a clear definition of agile. And then, yes, we see a little bit the shift away from these long big bang transformation projects towards more, meaningful business improvement initiatives. That is true. I mean, this is something that we are addressing as well, right? And I think this is also where the software as a service model or cloud is going to play a big role, because it also gives you more flexibility down your path, right? You don't have to plan hardware provisioning for the next 5-year project. You are really flexible, right? Agility to me also means that you can scale together with your business needs and your business requirements, right? And this is what, especially the software as a service model, I think can deliver a lot of benefit, where you can actually say, okay, let's start small, let's try something out. If it proves successful, then let's scale out. And if it doesn't prove successful, just throw it away without any waste, right? You don't need to think about the hardware that you provisioned. You don't need to think about the stuff that you probably hired to keep all this going. I think there's a lot of opportunity here, really, in being more targeted in terms of the approach and the goals of these initiatives.
Yeah, René, I agree with all of that, and I hear that too. I think it is becoming more about a consulting offer from tech companies than it used to be, where it was a tech offer. And I think that's part. There's two sides to that. One is that I think the executives wanted it to be a tech offer, and they didn't want to get involved with consulting because most of them hate that word. But seriously, you have to at some point get consultants in to help you with some of this stuff. I do believe that. I know that consultants have not always got the best reputation, and I am one of them, so I can say that. I think that it is, though, important to have people who can give you a systematic approach and to get down and dirty. One of the things I've noticed, and we've been talking about recently, is there's quite a lot of very big tech companies, successful tech companies, but they're sitting there with huge amounts of data that they haven't really deployed because they haven't really been able to work closely enough with their insurance or the organizational part of their clients to sort of get into what does the customer want and how can we deploy it. So I again agree with you that I think it was all these smaller companies where all the hype was, where so much effort and hot air and money was expended on very little. And I think Jeremy and I covered tons of them. What's this one do? What is it? They were all like solutions in search of a problem, most of them. And I didn't think that any of them, when I read what they're supposed to do, did anything other than a tweak to another system that you then ask the question, what does that do for me? So in the end, I think that's a good, healthy thing for the industry, probably. And I also think there's a lot more partnering going to come down the line. I guess, do you work in Guidewire, do you work as an organization with do you collaborate with a lot of other tech companies as well in this space? Because I see,
yes, of course.
I don't think you tech people sell that enough, because I think we all see you as cutthroat competition. But every time I speak to executives they say, oh, well, I'm working with SQL, I'm working with Guard. So you find, in other words, you're finding your utility, aren't you, in a market? You're saying, we know where we're positioned and what we do, and we know what we don't do. But I think that's a healthy thing, really. It's like Microsoft did that, didn't they? They said everybody in Microsoft thought that they were just trying to kill the competition, but the new chief exec said, well, actually, we've been collaborating with Apple for about the last 20 years, so you better get real that we can't live without our peer group.
Couldn't agree more.
Yeah. It's definitely an ecosystem, isn't it? And I think it's becoming more like that, René. You touched on the kind of the insurtechs that you bring in to help, I suppose, to help drive innovation within your organization as well.
Yeah, absolutely. I mean, again, as you said, right, it's a growing ecosystem. You need to collaborate, you need to work together, and you need to come up with new propositions to solve business problems.
Cool. Great. Well, those are our three highlights. I'm sure we'll be covering lots of ground, including those three areas at the conference in a couple of weeks' time. If anybody wants to see the agenda, I'll ping it out. I can do that. But René, I will see you there. Ben, I will see you there as well.
Thanks, Jeremy.
Thank you very much for taking part. And see you soon.
Thank you both. Really enjoyed it. Thank you.
See you both there.
So it was a great talk, wasn't it, Ben, with René? It's really nice actually to get an international flavour for some of this stuff, as well as not just the UK. Sometimes we get trapped in the UK, especially in London when we're talking about London market, and a bit more of a retail focus as well. But yeah, all great points. Really good conversation.
Yeah, I think the interesting thing is really just how much, in a way, it's with the investment levels being flushed out a bit. You've got a lot of quality, bigger players left, I think, which is what I was getting a sense of as well. And I think things like SQL 6 and so on. So the feel, and Rene was confirming there was partnering and better working together to a common aim. I see that Blueprint 2 have just announced they've got a bunch of people signed up to a statement of support for Blueprint initiatives when they come, which is all very lovely. And yeah, that's a good thing, though. I mean, I think that whole collaboration thing is very important. I don't think I've particularly got a stronger sense of that before, and that's positive. The other thing I think is obviously the whole conversation about what are we actually building any of this for? What's the purpose? What's the point? And I think that again is, I'd say that's part of the brand positioning of any organization is what's your promise, and what are you going to keep that promise? And I think that is becoming very important. And it's interesting that the technology people are talking about that too. So a lot of common ground, I think, across all sorts of different disciplines in the market.
Yeah. Good. Excellent. Thank you again, Rene, for joining us and helping us dissect that. So, what are you doing this weekend, Ben? You went to, not Seville, where did you go? Venice.
Yeah.
Last weekend. Where are you going? Rome this week?
I was in Venice. It was very lovely. It's a beautiful place. I hadn't been there before, and it lives up to expectations. Fantastic. I'd recommend it if people haven't been. Put it at the top of your list. And this time of year is very good as well. So, no, I'm not going to do anything very much this weekend at all, I don't think. Just maybe a bit of kids football, and that's it. How about you?
I am playing tennis for the first time. I'm being entered into a competitive league. It's the first match on Sunday. I'm a little bit nervous, to be honest with you. But,
you should be. So we'll have you.
It's a guy called Federer.
Yeah.
I don't know. Apparently,
I think they're coming. They're veteran players. I think they'll probably be coming into your thing.
Yeah.
So Murray, another guy, he might come in. You're fine. Yeah. So I think I don't know. You'll be hobbling around next week, basically.
I will let you know the score if we win, and I won't if we don't.
Right.
Very good. Right. Thanks, Ben. If you're coming in on London Market Claims, we shall see you on Tuesday. If not, have a good weekend, and we will catch you next week. Thank you.
Cheers. Bye.
Burgess and Bolton's weekly wrap up.